Welcome, my Wyckoff friends. Today, finding future winners the Wyckoff way. Welcome to Power Charting. I'm your host, Bruce Frazier. Let's get started. We have a lot to do. Let's not take a lot of time to do it. We have great tools available for us to be able to discover the very best ideas for future uptrends in the market. Let's talk about that from a Wyckoffian perspective. First, a great place to go for Wyckoff content, great information, uh, great tools, wyckoffanalytics.com. Go to the website, you'll see all this great content. Check it out and then join us. Pretty soon we'll be doing a Wyckoff market discussion. Roman Bogomazov and I do a weekly market discussion talking about the very latest that's going on in financial markets, and I think that you're really going to like it. Here, this is a review really from last week, and this is the triple Qs. You can see from this that we have a 3% box scaling. It's log scaling point and figure, and we had a count that went up to as high as 456.99. And I believe that we're today at 437. NVIDIA's having a monster day, had a really good earnings report. We're going to talk about NVIDIA today. And so here is the concepts that we're going to discuss. So here's a beautiful cyclic accumulation type bottom with a count that goes 376 to 423 on this conservative counting approach. Well, we take a bigger count, and this bigger count, which is across the entire structure, counts as high as 449.46. As of last week, we were at 439. We still have not exceeded that, even with the very big day in NVIDIA, which is now, I think the Qs are around 437. And so you can see that we've had a great fuel tank full of fuel to drive prices higher here in 2023 and 2024. And in fact, now we're fulfilling that. I contend that we're going to need at some point here very soon that the fuel tank is nearly empty and that we are going to be spending time refilling it for a future move. Go back to last week's episode where I talk about that in depth. I want to talk about today technique, methodology for how we can find best future leadership, best ideas for future uptrends. Now, as a really a contrast, I mentioned this last week, is the concept of distribution and distribution structures. And these form large periods of literally the disgorgement of stock by the composite operator types as they go from the beginning of distribution to the end. And actually, I had a request here that I used the laser pointer, so I'm going to do that. Thank you, and everybody, thanks for your kind comments and for your tips and advice. So this is really helpful. So here you can see, this is what I really want to point out today, is that uptrends end typically with some kind of a buying climactic event. You can see acceleration here into the buying climax and then a very sharp automatic reaction. And from the buying climax, we draw resistance, which can temporarily be exceeded, and we draw support below the automatic reaction. This gives us the range-bound condition. Now, you can see these are just two different types of distribution schematics. Read more about them in my blogs. Here is one that you can reference, but there are many others. Now, I want to really talk about, let's see if we can move forward here. Here we go. So I want to talk about a special type of stopping action called a reaccumulation trading range. We're going to do two case studies today on this. Mentioned it last week. Now, this starts in very much the same way as distribution starts, with an acceleration of prices into a very excited market, so to speak, big leaping upward moves with a buying climactic surge. We know it's a buying climax because we get a very large outsized reaction. much greater than the reactions that preceded it. We draw resistance at the buying climax, we draw support at the automatic reaction, and it gives us, our framework for a range bound condition where the fuel tank is refilled for a new uptrend in the future. These are, and I'm pounding the table, my favorite kinds of structures. These Wyckoff and reaccumulation structures they show up. You'll get a number of them in a big bull market surge, big bull move. You're only going to get one accumulation at the bottom of a bear market, but you'll get reaccumulations that will form over and over again on the way up, big ones, little ones, and so on. So I'm going to show you how you can find these structures, and I'm going to do it right now. And let's go to here, and you will see my new favorite tool is stockcharts.com. It's so good. It's so efficient. You're going to just love it. And it's only available to you if you are a subscriber. So become a subscriber. It's so worth it. But for those of you that are not subscribers, you can do many of the things we're going to talk about here with the scooter reports. And those are available to you at the same location. Let me show you how to find this. So here is the charts and tools page. And on the right side, you'll see a list of summary pages. Index members is where we're going to spend our time here for the next few minutes. Scooter reports is available. This is available to non-subscribers. Index members only to subscribers. But again, I think you're going to see here that it's a remarkably useful tool. The first thing I do is I choose an index that I want to study. You know that I am quite struck with the S&P 500. Institutions have to outperform the S&P 500 in their stock portion of their portfolios in most cases. And here you can see that we can go in and look at the S&P 500 and slice and dice it many different ways using the index members report. The NASDAQ 100 here is what we're going to concentrate on today. And this is the 100 stocks in the NASDAQ 100 index, which is the QQQ or the $NDX in the stock charts database. But you'll see here that these stocks are all listed and we have ranked them by scooter. So you just click on scooter and you start from highest and go to lowest. No surprise, NVDA is at a 99.2. 99 is about as high as you can go in the scooter index. And from there, you go all the way down to, I guess, effectively 1. And we are going to just look at a few examples of how we can see best leadership. And then I'm going to case studies where we can see how we can identify these before they start their big move. Let's look at PACCAR. So PACCAR is a big commercial vehicle stock. Here's the reaccumulation right here. And let me go to, oh no, I can't do that. Got to go back. And so I apologize that I don't have the line pen. Let's see if I can get this in another way and annotate. Okay, so here you can see is the reaccumulation. And this follows the structure that we just looked at right here. You can see it. And so this area is the what we believe PACCAR is lining up to do here. Climactic surge, small automatic reaction becomes a much bigger one, support, resistance, and then notice what happens during the 21-22. Now this is the bear market. And so in 22, PACCAR actually turns down early, but then when the bear market starts, it really goes into a range bound structure. Look at the relative strength. Relative strength is saying, hey, I want to be leadership. I'm going to lead the way in the future. And then look what happens. You get a sign of strength, a pullback into a backup, and then off it goes. I'll show you more examples soon. Relative strength was our huge tip off that PACCAR wanted to be leadership it started to make higher lows right here and get above its 39-week moving average. Fantastic. Okay, so now let's get rid of this and go to another one. And another one that I think is really noteworthy is CLAC, KLA Corp. And here, note the reaccumulation. Here we have a climactic surge, a test of that, very sharp reaction. I would draw support at this low. This is where this decline stops, support, and then resistance at the buying climax peak. Look at how it bounds this very tight range here. This is a beautiful reaccumulation structure and gives us beautiful leadership in an uptrend in KLA Corp. Now, the relative strength throughout higher lows all the way through here. So a big tip off. And you can see that the scooter was generally really high. Now the scooters will fall off here as you come into the final stages of a corrective reaccumulation period, but they generally won't break down to very low levels. They might get into the mid levels. We'll see. We'll look at that here in a minute. And let's look at one other. Let's go look at Workday. I think Workday is a little bit more of a, let's look at Costco. Look at this. Look at this beautiful structure. Buying climax, automatic reaction. This is the lowest low. It never gets back down here. Look at the higher lows throughout here. This is a hinge. Hinge is a demonstration of stock going into strong hands. This stock is being reaccumulated in this big range-bound state, which lasts more than a year. So this is a very, very interesting hinge structure that resolves itself upward. Relative strength starts to make higher lows as it scales up and out of this area. It's above its 39 in price. It's above its 39 on relative strength. So a great example of a pause in an ongoing uptrend, prior leadership, and you can see that from the relative strength here is prior leadership in the future. This is exactly why we focus on reaccumulation structures. Let's get to our case study. And so you can see here that and this shows it beautifully, you can see the higher low gradient throughout this area. This is a hinge, just like we saw with Costco. Notice how it constricts. Constriction is evidence of stock going into strong hands. When you have distribution, the volatility tends to increase as you get into the right side of the structure. Okay, keep that in mind. Remember that. Let's move on. Now, here's our first case study. Let me go to the highlighter. And you can see here that this is Supermicro Computer. Supermicro Computer has some very distinct reaccumulation type structures. One of the most important being that look at the relative strength that is taking place in the uptrend of price prior to the reaccumulation, a range bound condition that we see. So that prior winners are future winners in many cases. So we see here a climactic event at this peak, and we know that is confirmed, let's say, by the automatic reaction pullback. This just keeps falling down into this automatic reaction low mid-August, and thereafter we have a secondary test. This sets up the range-bound condition. You can actually see that this does not have the ability to get back up to the resistance of the buying climax peak, but actually builds its reaccumulation in the lower part of this trading range structure. Now, pay close attention to the way that Supermicro pulls back to support. Here you can see that the volume is already starting to diminish into this support area. This is very important. Volume does come in here This is part of our tape reading workshop, actually. And volume comes in here, showing that there is supply off this peak at this zone right here. And this volume comes in, but diminishes as it goes into support. So that's a very good clue that support is holding. This proves to be the lowest low of the support area. And we would call this a secondary test, has qualities or characteristics of a spring because it goes down to this low and then turns off of that and volume comes in right away on the upside. You can see it right there. The volume comes in and look at this beautiful, I circled this beautiful red bar. This is volume off the low. This is a higher low than the secondary test. So this is a test and the close is in the top half of a wide ranging day. This is very noteworthy. Some days are very important. That was an important day. Up it goes. This kicks off a rally that goes to resistance again, and then supply is again reasserts itself. It comes back down, but volume diminishes and it goes to a higher low. We draw this trend line here across these lows, which shows we have a rising gradient, as we saw in our reaccumulation schematic. And this rising gradient continues to reinforce or re-exert itself in January, into early December, in January, into mid-January as a test. And look, sign of strength. Let's put in these symbols. We have relative strength now working for us off of this important low here. We make note of that, and we can see LPS, sign of strength, another last point of support, another sign of strength, and a backup. This backup goes to old resistance, new support, and this sets up the condition. Look at the volume come in. I actually drew that in, sorry about that. But you can see that volume is coming into the upside. As you conclude a reaccumulation, you want to see volume coming in aggressively off of the tests, the lows and the key tests, the higher lows, because that shows that the demand is coming in as the completion of accumulation is forming. And that is exactly what we see here. And then when we get this liftoff, look at this mid-January, just this huge spike upward, which kicks off the uptrend and off to the races the stock goes. So here is the prior conditions. I'm going to show you one other thing about this in a minute, but I want to show you the point and figure chart. This is 2% scaling 3-box reversal of the area that we just counted. So you see here the reaction that comes in around 350, and the reaction really shows up in the point and figure, and then a range bound condition. Because we're using percent scaling, we tend to be very conservative in our counting because we're dealing with log scale charts. And we have a count here, amazingly, at the count line of around 253, it counts all the way up to 1140 to 1258. So far, we've gotten to 1074, and we've had a very sharp pullback. That might be a climax and an automatic reaction, probably a range-bound structure. Keep in mind that in a range-bound structure, especially with the amount of momentum that we have, that we can have an upthrusting action that can go above the high of 1074 here and could take us into this count zone where we would expect a new count to form either for distribution or reaccumulation. So we will watch this closely. But this stock gave us all the information in the world that it wanted to reaccumulate and be leadership in the future as it had been in the past. So very great Wyckoff case study. Study it. Here is again our reaccumulation structure, just as we saw it before. And again, this is just a reminder because our second case study is NVIDIA. And we know NVIDIA has just been a monster. And today it's having a fantastic day. It's up just under $100 at this point at 774.20. And look at this reaccumulation. Well, let's do a case study of this reaccumulation, because here's a stock that was very good leadership going into reaccumulation. It was exhausted. The fuel tank was empty. It needed to refill. But as we all know the story about NVIDIA, this is a stock that institutions and the public wanted to own. And I would say most institutions did not give up their stock. They just tried to shake it out from the trader types as it went through reaccumulation. And that's what happens in reaccumulation. That's the reason that in the very best stocks, you generally see a rising gradient of higher lows in the second half of the reaccumulation. Let's draw it here. This is typically how it looks. And this is a sign that the stock is very closely held by institutions and they are buying more if they can. But it is generally hard to do. Now, let's have a really close look at this, because prior winners tend to be future winners. Here's our buying climax. Arguably, this is it here. This is a test of the buying climax, so it might be this whole structure. Then a persistent downward stride gives us an automatic reaction. We draw resistance and support at those zones. Note how well they work in the future. And so this stock being a prior winner, it automatically is on our radar for the future, because we expect big winners to be big winners in the future. Now, let's look at the volume characteristics. Note into the secondary test of the automatic reaction low, volume is generally diminishing. Volume is high as this decline starts, which tells us supply is present. The institutions are going to mop this up as carefully as they can. And you can see here that even though these lows do hold, volume is high. But note that at this point right here, the volume is quite high, above its moving average. And it closes at the high of the range of the day, an important day because it's testing this prior low where it closed below the support area. And then it marches up to the resistance zone and does so without a down day. So this is quite impressive. And then it has a reaction to a higher low. This is a very, very bullish chart, because note that as this goes back down to the rising 39-week moving average, or no, in this case, it's the 50. I apologize. The rising 50, it's testing in here. And at the final day, the close is in the top half of a down day, but look at the high volume, and that high volume has latent demand in it. So it again goes back up to resistance, and this time it pauses here. Let's put in the labeling, because we would call this pause a last point of support and a backup, because it's happening at a very high level, very close to resistance, and it's doing it on low volume. So this shows exhaustion of supply as it pulls back. You can see the higher lows in the upward gradient. And again, this goes back to our prior point. This is what the best reaccumulations look like. And then it reaches a point where it jumps out of the accumulation area on exceptionally high volume. Demand is present. This stock wants to go up. Okay, and it does, in fact, and it goes from around 500 up to 774 at this time. At the same time, you can see the relative strength is in a rising gradient, really all the way from the September low, all the way up, and you can see it just working its way higher. We can see all that in the scooter numbers. We can see all of that in the index members list. And NVIDIA is both in the S&P 500 and in the NASDAQ 100, such an important stock. Now, we want to look at the point and figure. So here is a different way to scale it. This is 3-box reversal, 10-point scaling. This is not log scaling. And here is our reaccumulation. And because we're using 10-point scaling, this looks somewhat compact. So we count these columns. Let's just count them: 2, 4, 6, 8, 10, 11. That's times 3, 33, times 10, 330. And we add that to the low of 400, gives us 730. And then to the count line, which is at 460, 790. And we are just knocking on the door of that 790 count now. So I suspect that we may have a range bound structure, and we could build another reaccumulation and build a new cause for the future. Only time will tell. And so let's go to one final point that I want to make, and then we will be done with our case studies. On the left is super micro, and super micro, again, here's our reaccumulation structure. I want to show you this scooter. So let's blow this up and get more granular with what we're looking at here. And note that the scooter does fall off. Look, it spends most of its time hovering just below the 100 level. They don't have to do that. I mean, it could even be in the 80s, and it still would be considered to be a very strong stock. But look what happens. As it's getting ready to launch into its new uptrend, the scooter goes where it actually got into the mid 30s. And so relatively weak at the December lows, but the scooter starts to make higher lows here as it's gearing up to jump up and out. So, and the relative strength is also making higher lows, showing that SMCI wants to be leadership. So it's showing leadership, and the scooters are in a rising scale, higher lows throughout, and then it jumps up and out and off it goes. Let's now turn our attention to NVIDIA here, and pointing out that the scooter, again, strongest stocks going into the reaccumulation, they remain strong. This was in the 90s throughout here. And then as it's getting near the completion of its reaccumulation, the scooter actually falls off. Not as much as SMCI, but it does fall off and go into the 70s. And this is not uncommon at the late stages of a reaccumulation. Note that the relative strength just keeps making higher lows throughout. This tells us that this is leadership, that it continues to want to lead the market up. And this structure confirms that it is completing reaccumulation, as we saw from point and figure and from vertical bar chart analysis. And then when it jumps up and out here, it's still in the 70s on the scooter ranking, but it's jumping to the 80s and then into the 90s and then persistently rising. So with that, I hope this was helpful. I think you're going to find that finding prior winners and watching for reaccumulation structures is a terrific Wyckoff strategy that you can employ in the future. We may have other opportunities to do this in this ongoing uptrend if it continues. I believe it will. Look at last week's episode. And with that, I'll say thank you so much for being here this time. And thanks for all your kind comments. And we'll see you next time on Power Charting.